Okay, Chairman, we're ready to go live on YouTube to start at 5 p.m.
Okay, thank you, Dan. Right, it's 5 o'clock and we'll make a start now. First of all, you should see that this meeting is being recorded. I've just had a look down at the bottom to see if there was an icon for hands up. There doesn't appear to be. Maybe I'm not looking in the right place, but could I suggest if you can't find the icon, just put your hand up and we'll line you up to speak when necessary. That's basically the warning. I don't need to give any fire warnings, do I, or evacuation policies, except that you go out through my conservatory door that way if there's a fire. Okay, apologies for absence, Dan, please.
Thank you, Chair. We have no apologies for absence.
Okay, thank you. Any declarations of interest from members? No. Minutes of the meeting held on the 27th of January. Can I have a proposer and seconder to say that that is an agreed and accepted account of the meeting?
Councillor Coles has raised his hand.
I'd like to propose that we accept them as a true record, Chair.
Thank you. A seconder? We got?
Councillor Fowler has raised his hand.
Lovely. Right. Okay. Next one, draft statement of accounts. You'll see that probably on some file. Who's going to take us through that? Is it you, Peter?
This will be Kirsty.
It's Kirsty, right. Okay, thank you. Kirsty, all yours.
Thank you, Chairman, and good evening to all committee members. This report presents to the committee the draft statement of accounts for the 2019-20 financial year for review and comment. As stated in the report in point 4.5, whilst under regulations the Council's audit committee is no longer required to approve the accounts prior to audit, the Council considers that it is good practice for members to have the opportunity to review and comment on the accounts prior to the Chief Finance Officer's certification. In recent years, with the shortening of the audit process timescales, this process has been completed virtually via email to members of the committee. However, with the response to the coronavirus pandemic, government passed emergency legislation that relaxed those shortened timescales, which now provides us with the opportunity to revert to considering the draft accounts at this meeting. The revision to the legislation means that the fully audited document is to be signed by the end of November rather than the end of July. This is the draft set of accounts prior to external audit and their final opinion. The external audit commenced on the 22nd of June, and to date, 208 queries have been raised by EY, and 158 of those have been cleared. Of the 50 that remain, 17 are not yet due to be answered. They've given us a bit of leeway and time to answer those, which leaves 33 which are actively being worked on. The format of the accounts has not significantly changed from recent past years, and therefore should be familiar to you in appearance and content, with point 4.6 of the report noting the key contents of the document. The new section for 1920 is the group account section, which discloses the activities for Peterborough Limited, which we know as Aragon Direct Services. It's also useful to consider this report alongside another agenda item tonight, which is number 10, is the budget monitoring report final outturn for 1920. This item is similar to a company report, which provides additional narrative on the financial performance for the year, whereas the statement of accounts is more prescriptive in its content and disclosures. So with regards to the key movements for the year, the accounts show an underspend position of 96,000, which was transferred to the capacity building reserve. This followed the approval to borrow 5.6 million to help support the revenue position. As outlined in the Council's medium-term financial strategy, approval was sought and received for a capitalisation direction, which enables the Council to borrow for additional funds. 64 million was expended on capital investments, with some larger schemes which were supported during the year, including Hampton Lakes Primary School, Jack Hunt School expansion, housing schemes developed by Meacham, and other homes purchased from the open market. As outlined in point 4.9 of the report, key movement on the balance sheet include the reduction of long-term liabilities by 129 million, which is a result of a reduction in long-term borrowing of 17.5 million due to the change in strategy to use short-term borrowing to support the council's capital investment programme, and a reduction in the pension liability of 110 million. This is a result of a decrease in the assessed value of the scheme's liabilities, as a lower value is placed on benefits that will be paid in the future with regards to pensions to our employees. It should be noted that these accounts are as at the point of the 31st of March 2020, approximately 2 weeks into the pandemic. Therefore, at this stage, on the drafting of these accounts, the impact of the pandemic has been difficult to assess, and the team continue to monitor the position for trends as trends begin to emerge, and continue to work closely with the external audit team on this. Areas of the accounts which may be particularly affected include the valuation of buildings, assessment of the assets and liabilities in the pension fund, and of course, as you can imagine, the debtors balance, which represents the money that is owed to council. Impact on business rates and council tax collection continues to be monitored. As you will see tonight, Neil from the council's external auditors is here. And in March this year, Neil was due to present the external audit plan and discuss its contents with committee. So in discussion with Neil, we thought it would be useful for him to provide a brief review of the audit plan contents and how the audit approach is being amended to consider the impact of coronavirus. Neil, if I can hand over to you.
Thank you. Thank you, Kirsty, and good afternoon, members of the committee. This will be the first time that you'll have met me, although I met the chair of the committee at a meeting in January. My name's Neil Harris, and I'm an associate partner in EY's Government and Public Sector Assurance team, and I'm based out of the Luton office. I do have a portfolio of engagements that cover our Luton and Cambridge regional offices. Both myself and Dan Cook, who should be familiar to you, are your core engagement team for the 1920 external audit for Peterborough City Council, but this will be the first year where I'm your engagement lead. And as Kirsty said, I thought it'd be helpful just to give you a summary of the document that you would have received at your last meeting, and hopefully you've had a chance to read, which is our audit planning report that sets out our proposed audit strategy for the audit of the City Council's financial statements, and also the work we need to do to assess whether the council has adequate arrangements for economy, efficiency and effectiveness in its use of resources, which is our value for money conclusion. So in the audit plan that was due to go to your last meeting in March, that was an assessed risk-based audit plan pre-COVID-19. So just to remind members what the proposed strategy was, we'd included a significant audit risks associated with those areas of what we call the risk of misstatements due to fraud or error, where we think could manifest themselves in the financial statements of the City Council. And we were particularly guided at that particular point in time on the financial condition of the council and the steps that the council were taking to seek a capitalisation direction and the pressures on its ongoing budget and medium-term financial plan. Those led to audit risks associated with the incorrect capitalisation of revenue expenditure, the appropriate financing and accounting associated with revenue expenditure funded by capital under statute. And we also looked at other appropriate capital adjustments associated with the recognition of capital receipts, the accounting for the minimum revenue provision, and those were particularly guiding our work around the treatment of capital and revenue at the year end. As Kirsty said, this will be the first year that the council are preparing group accounts, so the consolidation of Peterborough Limited will represent a change in scope of our audit this year to undertake appropriate group audit procedures. And we'd also included in our audit plan a reference to undertaking a review of the impairment of receivables, particularly to do with the debtor that the council had with the CCG at the time when we started the planning of our audit. The audit plan also provided a significant commentary on the work that we thought was appropriate to respond to the council's financial condition and risks on financial resilience, which the council, I think, since I've taken on this audit, have been very open in disclosing to me and the audit team, and have been very clear on the steps that you as a council have been taking with MHCLG and others to address the council's short, medium and long-term financial challenges pre-COVID-19. And we responded to that in our audit plan by setting out the work we believed and still believe is appropriate to address those risks associated with the council's arrangements to secure its financial resilience, and those procedures still remain appropriate. In the audit plan, we'd also set out our view on the overall condition of the authority on our assessment of materiality, and our proposed materiality is 1% of the council's gross expenditure. That position hasn't changed in light of receiving the draft financial statements for review, and that materiality level is 5.2 million. What's called our performance materiality, which guides the level of audit testing we do on the council's core financial statements, which is the comprehensive income and expenditure statement, the balance sheet, the movement in reserve statement, the cash flow supporting notes, and the group financial statements, is based on a tolerable error of 3.4 million, which represents 75% of our overall materiality level. I'll come on to those materiality levels in a minute, because in light of COVID, you'd expect that auditors would have revisited their level of materiality, and I'll come on to some of the steps that we've taken in response to that. I suppose that's an overview of what was set out in our audit plan. We also set out the implications of some of the changes in some of the scope of our work, the risk-based approach that we're taking for this year on some areas of the financial statements, the group accounts, and also pressures impacting on the audit profession associated with regulatory professional context driving increasing audit work and costs, and the impact that would have on our proposed audit fee, which we are currently working with PSAA to set out the details supporting that proposed increase in the fee to 160,570, which was set out in our audit planning document. Just before I move on to the impact of COVID-19 and our strategy, just pause for a moment, because I appreciate that audit planning document was supposed to be presented by me in March. That is just the summary of what I would have told you in March. And I just want to make sure that I take the opportunity to address any questions you've got on that planning document before I update you with the considerations that we're taking as an audit firm and on your audit in response to COVID-19.
Are we happy? Yes, continue, Neil, please.
Okay, thank you. So in light of I think Kirsty's given an excellent overview about the impact COVID-19 has had on the preparers of the accounts, but also just because of the way Kirsty's engaged with the external audit team on at least a couple of meetings since the outbreak, a very succinct summary I would suggest on the impact of COVID-19 on not just the preparation of the accounts, the disclosures and judgments made by management, but the impact that actually has on the audit process as well. So thanks, Kirsty, for making my job a lot easier at this stage. But one of the key impacts of COVID-19, I think, is the change to the way in which we are working with the council. So this meeting's been held virtually. Our external audit has been undertaken virtually. We are now working remotely to undertake our audit. We have the technology and the means to do so within EY, but we've been working with the council on making sure that we understand the council's operating control environment in light of COVID-19 and how that's driving our audit procedures. Whilst I am aware that there's and I think Kirsty's given a summary of the number of queries that are out with the finance team at the moment and about how the audit is progressing, I think it's fair to say that technology and the means in which we're able to undertake our audit and have engagement with the council has not been affected as a result of COVID-19. I'd also say we don't have significant concerns on the council's operating control environment. That's an important point to say, because our view on the council's operating controls has a view on the level of what's called our performance materiality level. So I mentioned earlier that our performance materiality level is at a figure of 3.4 million. That's based on a percentage of 75% of our overall materiality. We can actually set a lower level of 50% of our overall materiality if we were concerned on the council's systems of financial controls, if we felt there was a heightened risk of error within the financial statements. It's fair to say that level of materiality is one that we keep under review throughout the course of the audit, but at this stage I'm not intending to revise the planned level of materiality that we had at the planning stage. We have, though, revisited our assessment of audit risks in response to COVID-19, and I think there's a couple of areas I'd draw out for you. The first is around the level of work we're undertaking on the valuations of the council's assets. Now, I think very helpfully, and I would praise the council for providing a very thorough disclosure note already in your fixed assets note, which summarises that your valuer has expressed a material uncertainty on the valuation of the council's assets as at the 31st of March 2020 in light of COVID-19. clearly, as part of our external audit work, we need to assess the veracity of that overall statement from your valuer and determine the impact that that has on our overall audit report. Now, if we were to concur with that judgment of your valuer, the likelihood is we would include an emphasis of matter in our audit report. That emphasis of matter is not a qualification. It's not a modification to your opinion, but it does draw attention to the disclosure note in your financial statements. Why I'm pausing on that a little bit is because your valuer has expressed a material uncertainty across every category of asset. And I suppose the challenge that we're having during the course of the audit is to ensure that that is an appropriate decision of your valuer, an appropriate judgment to take. The view that we take at the moment is certainly those assets that are driven by market value, investment properties in particular, those are more volatile to movements in retail, hospitality, construction and other sectors which might drive market value, are more susceptible to the impact of COVID-19 than perhaps some assets that are more specialised in nature, where the actual build cost or other assumptions implicit in the valuation may not change significantly in light of COVID-19. So I think we just want to explore a little bit more with the officers and the valuer on that overall distinction across all categories of assets. In addition to that, our real estate team are undertaking a review of a sample of assets across each category of asset that you've got, both those valued on the basis of depreciated replacement cost, so specialised assets, but also investment properties too. And we've agreed a strategy as an audit team about disaggregating your asset base and making sure we've got sufficient coverage on our testing of valuation assumptions and where we need to involve specialists, and that work is underway. The second, I suppose the second area which will feel new to the council this year, but probably to you as members as well, is this concept of going concern. Now, in light of COVID-19, you'll be well aware that in unlisted and unlisted companies, there is a lot more focus about the level of disclosure that's included within the financial statements associated with the viability and liquidity of organisations in response to COVID-19 and what their scenario planning and how robust that scenario planning looks like in light of available economic data and trends. For the public sector, that concept of going concern is a little bit more nuanced, because CIPFA have a very clear position about the prescription on the council statutory services always being provided unless there's an act of parliament that seeks to prevent those services from happening in the future. However, we believe in EY there's certain principles within accounting standards and also in the Financial Reporting Council's guidance to auditors, which is called Practice Note 10, that asks auditors to ensure that there's a fully documented assessment and a thorough disclosure on the council's assessment of its viability and liquidity position. And that assessment looks 12 months from the date at which the accounts are authorised for issue. So just to take a working assumption that sometime between October and November of this year, we will be concluding our audit, we'll be wanting to ensure that the officers' proposed notes around viability and cash flow and going concern look at those accounts 12 months from that period. Now, we've been working very closely with the council to get a lot of documented evidence on the council's assessment of going concern, looking at the projected budget for the next 12 months, the impact of COVID and cost pressures and income pressures on the forecast budget and the medium-term plan, but also the cash flow projections for the next 12 months to ensure the council's got sufficient liquidity and cash in support of its budget. And we'll be working with the council on the adequacy of the disclosures that are currently in your draft financial statements. And if there are any proposed revisions to those, they will come back before this committee. But this is a piece of work that we're doing across all local government bodies, police and fire too. I've been involved in this exercise for EY on some outstanding 18-19 audits, and I've also been working with the National Audit Office on the expectations of auditors in the public sector on going concern. And I think we will do our best to keep this work as proportionate as possible, but there will be an expectation of at least some sufficient disclosure from all local authorities on liquidity and cash. But I would say, though, on viability and the cash position. But again, just to give credit to the council here, I can see a significant level of disclosure already in your narrative statement associated with the council's financial position. I can see references to the basis on which the accounts are being prepared for audit as a going concern. I think Dan and I will just want to test some of those assumptions in the financial statements out and make sure we can corroborate those, or if we think the disclosure needs strengthening in any way. And because you're a major local audit, and because of the concerns you've all expressed as a council on your financial condition, we will almost certainly need to consult on your disclosure with our professional practice team before I'm at a stage of releasing the audit opinion and what we propose to say in our audit report. It's fair to say for going concern, the worst case scenario for the public sector would be for an auditor to express a qualification on the grounds of there being a material uncertainty on going concern. Now, from the work that I've done to date with the National Audit Office and 5 other audit engagements, my own view is that's likely to happen where a council is consolidating a commercial trading entity, and that's significant to its operations, and the council is acting as the lender of the last resort. I think that is a case where I do believe you could get into the territory of material uncertainty on going concern. Aside from that, I think it's more about the rigor of your disclosures in the accounts and that they are consistent with our knowledge. So sorry to elaborate on that a little bit more, but I think going concern is something that in the past we've not really spent a lot of time on as external auditors in the public sector. So I did think it was important to make you aware of that, particularly as we don't draw that out significantly in our audit plan, but that has been a significant change since the plan that you would have received in March. And I'll pause at that point then to take any further questions from you.
Sorry, Chair, I think you're on mute.
Yeah, it would help if I unmuted there, wouldn't it? I muted because it's pouring down and I didn't know if you could hear all the rain on my roof. Any questions?
Have Councillor Coles first, Chair.
Okay. Andy?
Thank you, Chair, and thank you, Neil, for your briefing. I think one of the issues that concerns me is the level of uncertainty that we're all facing in local authorities. Have you, as a company, been able to come up with some sort of hierarchy of risk around assets, so you know the level of exposure in a variety and where you will be more concerned and less concerned, and if you can, where you think we sit on that scale?
Okay, thank you, Councillor Coles. So in EY more generally, all audit teams have been provided a briefing from our real estate team about where we believe that there to be the risks associated with valuations at the 31st of March, and this concept of material uncertainty and where we think that's most volatile. In our opinion, this is most exposed for councils that have investment properties and those that are more at the behest of the market. So investments in retail, hospitality, construction, we believe are most exposed to significant volatility and uncertainty, and we would expect those to be a significant risk in all of our audit plans, and we would expect for all of those assets for them to be reviewed by the specialists that we have in EY. Now, how Peterborough sits on that scale is that actually I don't think you have relative to others that I see, I don't think you have a significant level of investment properties, or those that would be more commercial in nature, and I think that's a good thing. Having said that, you do have a wide diversity of assets as a council, but that's no different to other unitary authorities. But we've taken the view that that because your valuer has expressed a material uncertainty across all categories of assets, it's important for us to challenge that judgment from your valuer and how volatile and uncertain that is before we reach our audit conclusion. But I do have other audits in my portfolio where the level of commercial properties and those more exposed to the market are a much more significant percentage of the asset base in the balance sheet, and obviously that's driving even increased audit procedures and risk.
Thank you very much, Neil. Thank you, Chair. My only sort of question, I suppose, is because we're such a fast-growing city and that housing is, or house building, should I say, is one of the areas where we do have a level of investment through our companies. I'm guessing that that's not so much a vulnerability, because bottom line is that even though there may be a sudden retraction in the value of properties, that's not going to be a long-term issue.
No, obviously I think you'd look at these things over a period of time, and there's a link between the valuation at the year end and actual medium to longer term strategy of the council on its capital programme and the benefits and realisation it gets from investment in housing. And in doing so, I'm sure the council will consider all available economic trends to make sure it's not taking the appropriate risks when making future investment decisions. But in terms of the valuations at the year end, they'll be struck based on the current assessment of the housing market at that point in time. And as I say, I think it's more those driven by retail, hospitality, leisure, and investments in that space, where I think there's much bigger risk at the moment in terms of what's in the financial statements.
I'm grateful. Thank you very much.
Okay, any more questions?
Yes, Chairman, we have Councillor Fowler next.
Right. Councillor Fowler?
Okay, Chair. I've got a couple, so I might have just to do one at a time. Is that okay?
Yes, fine.
Okay, first one I'll go with 2.6 states that the accounts must be signed off and certified by the 30th of September by the council section 151 officer, etc. Just, almost as a point of information for the public, just explain why the 30th of September is so important and what exactly would happen if these were not signed off.
So
answer that. Am I on unmute now? I am.
Okay.
Sorry. I was talking and not doing anything. If you remember in previous years, Councillor Fowler, we would have. My video's gone as well.
Yeah, you're back now.
I'm back. Sorry. In previous years, that date would have been actually the 31st of July. And the importance is that this information gets put into national returns. So the and we're compared against everyone else for performance. And so the importance is that we get everything done. That said, there are about 40 or 50 councils that didn't deliver to that timescale last year for various reasons. However, Peterborough has always been an early adopter of the audit standards. And in that period, we will have been out for the public consultation as well, which is our accounts are open for challenge. And that starts in August, doesn't it? So the importance is to make sure that we're open and transparent. We've set this is what's in the accounts, and the public are asked, and the audit committees have to sign off that they're happy with what we've got there, because that's how we're compared to everyone else in the end.
Okay, fair enough. 4.4, if that's okay. 4.4, it says about to give the council more flexibility, the requirement for the public inspection period to include the first 10 working days of June has been removed. So simple question, how does reducing the level of public consultation allow for more flexibility for the council?
Kirsty or Neil might need to give me more technical on this, but what it's been done is we've actually moved it later. Because the accounts wouldn't have been ready in June because this is written for all councils, and although we probably would have just about been ready at that stage, we were pretty close. It's for every council in the country, because in previous years there's been a real battle to be the first people to close the accounts and other things. I've been there with another council. However, where we are now with the regulations is the government want us to all have our accounts open at the same time for challenge, and so it is still a full month's process.
As all I'd add to that, if I may, Councillor Farrar, is the MHCLG have issued revised timetables this year in response to COVID-19, just to provide greater flexibility to preparers of accounts and auditors, but the council still are intending to fill their responsibilities to make the accounts available for public inspection. But I agree with Pete, albeit a bit later, and that it also clearly assists our audit timetable as well, because the actual target date for the audited accounts is now the end of November, whereas previously last year it was the end of July.
Okay, final question, if that's okay. 4.9 talks about a reduction in long-term borrowing of 17.5 million and a reduction in the pensions liability of 110.5 million. Does the reduction in long-term borrowing mean short-term has gone up? And for the record, could you explain what the pensions liability actually is, as some people may be concerned that this is an indicator of a huge shortfall in the council's pension plan?
Kirsty, do you want to do the debt and I'll do the pensions?
Yes, okay. So with the amount of borrowing that was undertaken, the council had the strategy of moving some of the longer term debt that we had into short term in order to mitigate some of the forecast overspend that we were anticipating in 1920, and thus get savings from that. So shorter you go, the cheaper the rates are. Because our maturity profile is quite flat, we were able to take advantage of this, and it tended to be borrowing with other local authorities.
And with the pensions, yeah, when I first read it and saw the massive difference, I wasn't too happy either. But it's the same. I mean, I'll let Neil comment after I've done, but it's pretty much the same across a lot of councils across the country. There's been a change to a degree on how the government have valued liabilities. So you'll have seen our asset base has gone up by about 17 million on the triennial revaluation this year. However, the way that actuaries have assessed the long-term liabilities of all the pensioners has meant that liability has gone down. And so that's the difference. And you'll see it across just about the vast majority of councils in the country. It's highly technical, and we'd probably, if you wanted to, it is something actually this committee should be interested in. If we wanted an item on that on a later committee, it is worth getting the actuaries in, because actually they should be held to account for significant, £100 million changes, because it rides its way through the whole accounts, and because it's so significant.
Yeah.
And Neil, have you seen it other places?
Yep. Yeah. And I don't think I've much to add to that really, other than clearly it is a significant number. There's always a dichotomy between what the accounting position is and what the health of the pension fund is, which you'd only really get through the triennial review that's undertaken. And certainly I would always encourage to look at the two alongside each other. But in terms of the accounting, it's also going to have some pressure at the year end because of the volatility on the pensions assets, again as a result of COVID-19, and will be the subject of the audit that's going on the pension fund financial statements at the moment.
Okay, we're happy with that.
We've got Councillor Joseph next, Chairman.
Right. Councillor Joseph.
Thank you, Chair, and thank you for your report. Couple of questions I wanted to ask. You've got built housing of 7.7 million with Meadsham and 4.2 on the open market. So how many homes did that £12 million provide for Peterborough?
Councillor, I'll have to come back with the actual numbers.
Okay.
Because that's a number of schemes, so we can come back with that number.
Okay. With the 467 million borrowing, is that not quite a highly geared ratio for us, and how much of a risk is that?
My view is it is relatively high. However, and almost 40 to 50% of it is down to what we've had to build in terms of schools. So remember, Peterborough has been high growth in the top 5 in the country for the last 20 years, at least. We've had to build a lot of schools. Annoyingly, those schools are generally run by third parties now, but I hold the debt. And so, a significant portion there is due to schools. The rest of it is the infrastructure that we've had to put in place as a growing city.
So how at risk are we? How open to real issues from being so highly geared? We are still the market.
When we get to the outturn report, we're still over 100 million under our capital financing level, which we put in as a prudential indicator. So we're still below that. However, it's a good point, and it's a point that the changes to government legislation about about 2 or 3 years ago now made. You found that the vast majority of councils in the country who had housing revenue accounts hadn't been able to invest because they were all at the caps. So what the changes made 2 or 3 years ago has meant that we can actually borrow to deliver what we need. However, as a point of caution, the government, and I was in a meeting with the Treasury on Monday last week, the Treasury are very keen to stop investment for yield schemes. And so there's a consultation out at the moment on debt and debt financing and the use of the PWLB, where they're going to make the 1.5 officer sign for 2 years of borrowing on a rolling basis, and that certification is going to be a very important point. So at the moment, we don't have to do that. We say this is what we're going to do. We're going to have to be far more regimented in the future to say this is what we're doing and this is why it needs to be done. That's where we got on Monday. Of course, we need to see the consultation close, and the Treasury and MHCLG just confirmed that.
Okay, thank you. And obviously, we've spoken a lot about COVID-19 and obviously the different working conditions and the new norm and all the rest of it. And part and parcel of what everybody has been doing, not just the council, obviously, is that a great many people are working from home now. Do you foresee this as a way, obviously, if this continues, not just because of COVID-19, but because people prefer it and it can be a very effective way of working, do you see that this may possibly generate savings in the future that could help to bridge the budget gap that we've got?
Councillor, I totally agree. I think the COVID emergency has pushed all of business, which isn't really customer faced, into asking questions about how it's delivered. And I think we've got a significant portion of staff now that are quite comfortable working from home. We've got to put more stuff in around it. We've got to make sure that everything works better. We've got to make sure we guard against mental health, team morale, etc., etc. But it's going to be the way of the future. However, of course, if we're doing it, everyone's doing it. So I'm emptying space with one arm and I'm trying to fill it with another. One of the things that might be an advantage for us, and one of the things we're trying to take advantage of, is the fact that the civil service is still trying to move out of London, and we continue to get queries on that. Have we got office space? And it's usually whole floor type thing. So there is possibilities there, but it's now more difficult than maybe it was a year ago.
Okay, thank you. That's all, Chair. Thank you.
Okay, thank you. Any more questions? Nope. Thanks,
Councillor Fowler.
Councillor Fowler. Okay.
Don't worry, Chair, it's not a question. But are you looking at the agenda online, 4.13? Or are you looking at hard copy?
Are you referring to me or to somebody else?
Yeah, you, Chair. Councillor David Over.
Yeah, okay. I've got to get rid of the...
I'll make my point then if you want to look at it. It's just 4.13. There's that final sentence, I don't know if anyone else can see it, which is the public document on the council website that says, as a result, this reserve matches the pension liability as detailed in error reference source not found. Obviously something wrong with the online document there. Just wanted to make you aware because it's out there for the public at the moment, that's all.
Okay. I'm just having a look now. It takes me about 3 operations to actually get any of the papers up.
Page 12, 4.13.
I've not even got to open documents yet.
Sorry.
It's okay. What did he say? Which number?
4.13. It's the final sort of sentence. As a result, this reserve matches the pension liability as detailed in, and it's just got its things as error reference source not found.
Yeah, we need to we'll get that corrected, Councillor Fowler.
Because it's on the public, it's on the website.
Yeah. Yeah, we need to get that corrected.
Yeah. Okay.
Thank you for that.
Right, I'll get.
No, Councillor Jones next.
Oh, okay. Thank you.
Thank you, Dan. Thank you, Chair. Just one thing going on about our exposure. We haven't invested in shopping centres or large office blocks. Neil, perhaps you could tell us, is at the moment, that's probably a good thing, you know, with more people working from home and a lot of the banks and who are home working. Is this going to be, do you feel this is going to be a problem going forward, you know, in how we invest? You know, I know a lot of, not a lot, but some local authorities have invested in out-of-town shopping centres and bricks and mortar. How are we, relatively speaking? This is my first audit committee, and we, you know, you seem impressed, we seem to be doing okay, but just in the wider context, where does, you know, if we had, I think Andy Coles was asking before, if you had a kind of league table, you know, where would we sit in our level of either exposure or the way that we're stacking up against other councils in this matter? Thank you.
Well, thank you, Councillor Jones. I'll probably disappoint you and say that I'm probably not going to give you a league table on where you sit at the moment. However, I'll probably split this into two parts. I would say in terms of the council's core statutory functions and its overall financial resilience and sustainability, I think the officers have been very open about the fact the council still has challenges on its budget now and in the medium term, and have openly disclosed that, and with central government, and obviously that's going to be a key focus of our audit. So I would probably say, relative to others that I see, that still remains an area of concern for us as an external auditor as well, about the council's ongoing financial position. But that's not to say the officers aren't taking all the appropriate steps to try to address the concerns that they've got, but you'd expect the auditor to also be looking very closely at this too. However, where I think the council has probably has that benefit is it's also not, in addition, also exposed to significant commercial trading subsidiaries and entities that it's made decisions to invest in over time as well, because those that are particularly exposed to retail, hospitality, construction and transport, for example, are more significantly impacted as a result of COVID-19, and some sectors more than others. But you know, the understanding that I've certainly got from the government announcements recently is that where councils have made commercial decisions based on their own risk appetite and due diligence processes, if they are exposed as a result of COVID-19, at the moment, my understanding, and Pete and Kirsty can correct me if I've got this wrong, I'm not picking up that the government are going to be providing support to those councils that have had a budgetary impact from that. And if those councils have a significant percentage of revenue that they seek to gain from those activities and are exposed, clearly that's a significant issue for those councils. And going forward, the impact of COVID-19 may make some significant changes about what's expected of the role of local government and decisions and investments that local government take now and in the future. Now, that's not for me to say that commercial investment's a bad thing. It's just taking a cold look in light of COVID-19 about the level of risk appetite a council's prepared to take now and in the future.
Okay.
And just to back up what Neil said, the government, the 3 pillars the Secretary of State announced a week ago Thursday, one of them was to councils could recoup up to 75% of lost income. That's only fees and charges, it's not investment or commercial. So he's been very, very clear there.
Okay, Dan, anybody else that we've got down? I can't see anybody with a hand up.
Councillor Jones just put his hand up again.
Oh, right. Councillor Jones, please.
Councillor Jones didn't. My apologies. It must have been in error. Sorry.
Okay, thank you. Oh, we through with that. Now,
We have no one else, Chair.
right. The recommendations are to review and make comment on that item, which we have done, I think, sufficiently. So thank you. On to item 5, annual governance statement. Is that Fiona's?
That's me.
That's you. One of these days, I'll find out the correct person.
Thank you, Chairman. The annual governance statement sets out a corporate view of the processes and procedures adopted by the Council. As the title suggests, it gives the Council's view of governance arrangements and their appropriateness. The statement follows the 7 principles of SITFA and SOLAS, framework of delivering good governance in local government. The statement requires evidence to be compiled in order to satisfy these criteria. Tables 1 to 4 set out the items the management feel are governance issues and the steps they've taken to rectify them. Those items identified in previous years have been mitigated. There are 5 issues identified in 1920 that will require monitoring during the year. These are, and we've talked about this before, setting a balanced budget, the implications of COVID-19, council structures, levels of debt, and loss of key staff. The internal audit report has given the council an overall assurance level of reasonable assurance on the overall standard of internal control framework. This helps. The council obtained an unqualified view of the accounts in 1819, although they do also identify the significant risks in regard to budget gaps, which have been picked up both above in the governance statement, but also in the conversation we've had about the statement of accounts in the previous item. The audit committee are asked to review and approve this document and then advise the chief executive and leader that they can sign the document for its inclusion in the statement of accounts.
Okay, right. I've got no hands up as far as I can see.
No, Chair, have no. Oh, Councillor Fowler just put his hand up.
Okay, Councillor Fowler.
Sorry, Chair.
And then Councillor Coles.
Okay. Where are we? Right, page 21 states the government have been responding to the reports focusing on the social care pressures being faced by the sector and have announced additional funding. Question is, how much extra cash do PCC need for social care and how much have we received so far?
Just get into that page just to make sure. So page 21. The council have received so far, actually I don't need to even look at it. The council have received so far £11 million in 2 tranches of income to look at to rectify budget issues because of COVID. On top of that, specific for social care as well, the CCG for Peterborough and Cambridgeshire have given us £2.7 million, and as well as that, we've seen the care homes issue in terms of PPE, and we've received another £2.5 million for that area. However, in overall terms, if we look at the monitoring report that went to Cabinet today, in terms of COVID, we're still around £14 million short expenditure against income.
Oh.
And we're not unlike many other, the vast majority of councils, Councillor Fowler, in exactly the same place.
I'm sure they are, but we're not talking to them, you know, it's Peterborough, isn't it? Just one quick one before Mr. Coles gets in. Page 22 states schools balances total 3.2 million at 31st of March 2020 compared to 3.4 at 31st of March 2019. Talks about this reduction reflects 4 schools converting to academy status during the financial year, and mentions about the point of conversion of reserve balances are transferred from the council to the new academies, and mentions that the council has a mechanism for reviewing the levels of reserve balances for schools and allows up to 8%, yada, yada, yada. Basically, the question is, so am I right in saying, or my understanding, that academisation reduces the amount of money the council has, and academisation sees a large amount of taxpayers' money being handed over to private trusts?
So, Councillor Fowler, the accounts at the end of the financial year, or the time when the school transfers either to a trust or whatever, that balance of whatever's in the reserves that is attributed to that school transfers to the new place, yes.
Okay. Thank you. Councillor Coles.
Thank you, Chair. My question relates really to the combination, I suppose, of the risks of COVID-19 with cybersecurity and, to a lesser extent, its health and safety. All of that is going to be of interest because we are all working from home. We're using facilities that the council have provided for our staff and for us. Do we have particular concerns around cybersecurity that are not currently catered for? I note that we were talking about trying to attain a level of accreditation in the report under item 5. But are we going to need to put more effort into that over the extended period of time where so many staff are working from home?
Councillor Coles, we already have. So you'll see on your council emails, you've got that orange band. That's what that is. in addition, I mean, I've given out now almost £32 million worth of grants to from Bees to the business community. There's all sorts of things that Steve Crabtree, myself, and Mark Sandu are having to look at in terms of fraud. We're getting almost daily updates from the government on where fraud is happening in the sector. So yes, it is a significant issue, but at the moment we seem to be diligent enough before we give out money to actually reduce our risks.
Thank you, Peter. And the other question was really about how vulnerable our staff might be to cybersecurity issues because they're working from home and not immediately under our own roof, if you like. I
don't think it's particularly different to what it would have been under our roof, but what we do make sure is, again, you've got it on the emails, and when we have, it was twice weekly, it's now weekly updates to staff. They're reminded quite regularly about IT security and keeping vigilant. Because you're right, the one set of group of people that are actually not changed their working pattern at all are the fraudsters.
I'm grateful, thank you.
Okay, thank you. Councillor Farrow, you've still got your hand up. Have you just forgotten to remove it?
Sadly not. Sadly not, Chair, no.
No? Okay, go ahead.
Okay, got to say, first of all, I'm very impressed by Councillor Coles' background. For a second there, I thought it was very learned, but it turns out it's not real. Very impressed, very impressed. The points I was going to make were page 25, the council continues to build closer working relations, partnerships, with Cambridgeshire County Council and other neighbouring authorities or councils, authorities, and talks about, the benefits of this sort of sharing of resources. I just wondered, are there any plans to work alongside the likes of South Stephen District Council? Because if you do go up Deeping Way, there is, I think, a potential for some serious crossover work and possibly some savings.
Councillor, I'm just that is part of the previous item we've signed off. We're on now page 1112.
Burger. Okay. Which one? We're on 1112.
Sorry, we're on. Where does this one start? Sorry, I'll get to the right page.
This is the statement of accounts, isn't it?
No, we're on the governance statement. So it is 129.
Oh, apologies, then. My bad.
Okay. But in answer to your question, we do work for various other councils anyway. I mean, we work for about 12 or 13 different councils and get income from that. So we would always look to see if we can do work with or for other councils as well.
That's it. No other hands up as far as I can see. Lovely, thank you. We've got 3 items here to deal with. The first one, to note the arrangements which we've done. Review and comment on the annual government statement, which we've done. And then lastly, number 3, subject to changes identified above, agree and approve the statement for signature by the Chief Executive and Leader of the Council. Are we all agreed? Yes, I see no dissent. So thank you. We will say that all those recommendations are passed, and on to agenda item number 6. When I found it.
And Steve Crabtree will be introducing this one.
Right, okay. Item number 6. Oh, the fraud policies, yeah. Okay, Steve.
Thank you very much, Chair. The documents in front of you were due at the March committee. Obviously, that was postponed. So these are the counter-fraud policies which are used across the organisation, in particular around the fraud areas where we're talking about anti-money laundering policy. There are a number of policies in place for sanctions and prosecutions, in particular for the council tax and business rates, and also for blue badges and car park permits. And in terms of fraud, it's an area which is increasing. People are looking to exploit councils at every opportunity and abuse the system. As we have finite resources, we need to be acute to try and stop those. So these are a number of measures which we're putting in place and have been in place for a number of years, which are brought to you for information. Back in the committee in January, we brought you an update about all the frauds which have been perpetrated against the council, in particular using the National Fraud Initiative, which gave a high level position of the monies which we've been able to recover. These policies which are in place and have been operating for a number of years, if we do come up with any successful prosecutions, we actually get involved with the communications team so we can actually highlight that offence to the media, and also to raise that profile so it acts as a key deterrent. In terms of the levels of fraud in previous years, yes, they have been probably lower than we would normally expect, but as has already been mentioned, with cyber security or the number of grants which have recently been paid out, it is probably going to be on the increase, if not already. So the policies are just for your information, which we're operating on. Future points in the year, we bring an annual fraud report, which was on the schedule for the September one, which will give you data against each of these policies of how successful we have been to get prosecutions, etc. I'm happy to take any particular questions you've got.
Sorry, Chairman, you're still on mute.
Fine, it's all happening here. Somebody's decided to print off my printer as well. I don't know, got everything's going on at the moment. Rain, printers, 2 computers, you name it. Okay, basically we have got to look at the report. We reviewed it, made comments. Are we all happy with it?
Councillor Jones has his hand up.
Councillor Jones, did you say?
Thank you. Yeah, thanks, Chair. Just a quick one. Just in terms of fraud on the increase, is this generally, is it COVID-19 or the working from home? One of the things I like is context, and it's easy to say, I'm not suggesting it's a throwaway line, that fraud is on the increase. The types of fraud, obviously, you're dealing with, but is there anything for it? Is it a more technological age? Is it that there seems to be people taking advantage? What are the reasons for it? And you know, even though there is a fraud policy in place, which hopefully is successful.
Thank you, Chair. There is certainly across the whole of the public sector increases in fraud occurring. One of the things these policies do is it comes from in 2 angles. Some of the frauds could be down to errors by the human in terms of for single person discounts, any change in your circumstances, you're meant to notify the council within 3 weeks. Quite a few people don't do that. So you could ask, is that a fraud or just somebody's forgot to do it? So things like that, there are increases, but cyber security is certainly one area where people are getting a lot cuter and targeting industries to try and get information. When we come on to talk about the internal audit plan, internal audit opinion, and the works we did last year, one of the areas which was the council was targeted on was a manipulation of the accounts payable. Somebody tried to get in and change the records to take monies out of us. So they are trying to get more sophisticated and take monies off us. We're trying. It's almost like we're coming with one hand tied behind our backs, but we're trying to put as many processes in place to try and mitigate it, reduce it. And as I said already, across the country, it is on the increase.
Okay.
No more hands up.
Check if any more hands. No hands. Right. Thanks, Dan. Okay. Thank you. We've noted the contents of the report and approved the updated policies. That's fine. Peter, are you the next one?
Steve again.
Steve, right? Okay.
Thank you, Chair. The annual internal audit opinion, which is on pages 179 to 216, this sets out the work which internal audit has done during the year, its performance in delivering those works, significant governance issues which we're bringing to your attention as members of the Audit Committee and which are also reflected in the annual governance statement, and finally an overall opinion on the control environment in place to minimise the risks. There are 3 issues which we identified in the year which stand out in our reports, which is Pete's already mentioned is in the annual governance statement, which is a cyber security, budgetary control and COVID-19. And we've summarised those in our report on pages 192 to 193. From all the works which we've been able to conclude, we've come to the establish that we can provide reasonable assurance to members and the wider Peterborough community. Obviously, this has to be taken in context because we can't look at everything across the organisation, every single system, every single process. But we do focus our efforts on those areas of highest risk. So running through the various appendices, Appendix A sets out the work and how we go about undertaking our reporting. And on page 188, there's a table there which shows the level of outputs by reports, whether grants or consultancy. And those, we then take that's analysed in later tables. So but on pages 189 to 193, we set out our views on the various governance arrangements adopted, whether that's financial governance, corporate governance, risks, risk management, partnerships. So that puts some more context into actually the work we've undertaken and what we see about the organisation. And that sort of mirrors what's actually in the annual governance statement. On page 194, we highlight the resources which we've used to deliver our works. And our works is not just for Peterborough, some of our resources are utilised for doing works at other schools, for Vivacity, for the Combined Authority. One thing which have actually happened this year, we've actually been able to deliver more days than we initially planned, partly because we had a vacant post. We didn't know exactly when that was going to be filled. Once that was filled, we've been able to deliver more audit works to the benefit of all our clients, which also was included some additional time other officers have done. So that going into the main areas of the report and the tables, on page 197, that's the various governance and assurance works we've undertaken. Those are predominantly the audit reports and things which refer to the audit committee. There's other items of governance and risk management, page 198. In terms of the anti-fraud culture, which we talked about in the previous committee item, that's set out in the terms of the culture, anti-fraud culture on 199. On page 200 of the various financial systems which we've undertaken during the year, obviously make the point there are 2 audits which we undertook, which we've given limited assurance. So we identified some urgent issues which needed to be addressed. And those later on on the agenda, we actually have those executive summaries for member information. The next sections, we have external organisation works we've undertaken. Primarily that's what things such as works about Amy and so that coming back, works with partnership boards and so on. Page 202 sets out the work we've done on programmes and projects. Again, there's one limited assurance audit on there, and that's again the executive summaries provided. 202 has the contracts work we've undertaken, and 204 to pages 206, that's a service delivery. Now those areas are where we've risk assessed the organisation and come up with what the key areas to look at. So those are focusing on the risk registers and the service delivery. Finally, the last 2 sections, we have the grants and certification work. Invariably, monies which does come into the council for grants, there are various stipulations to it. An internal audit will verify those to make sure the money has been spent in accordance with those guidelines, and we certify it or not, as the case may be. And finally, the last page there on 208 is the external works, which I did mention. So obviously we do, as I mentioned, vivacity and combined authority works we do. Those aren't included on our papers here because all the works we do are for those other organisations, and those reports go through their appropriate audit committee arrangements. Happy to take any questions you've got in relation to any of the audits which are on there.
Okay. Councillor Coles.
Thank you very much, Chair. Thank you very much for a very interesting report on how things have been working out over the year, Steve. It just struck me looking at the limited assurance concerns you have around purchasing card systems. I appreciate there's an appendix. Is it not just the nature of this sort of provision that it's going to be quite difficult to monitor, and there's going to be variation with the way that people use it, and to some extent you have to live with a level of uncertainty around this sort of provision?
You will have that on most systems, and that's new arrangements coming in place for purchasing cards as a new way of that operating. So that we're hoping will reduce.
It just strikes me that certainly when I've monitored the similar sort of use of a company credit card, that it's incredibly difficult to maintain control over it. And have you got particular systems in place that you think will be more robust than heretofore?
One of the things which is going on across the organisation relates to the overarching financial controls, which is works which resources, which has been, Kirsty and Peter have been heavily involved with, is reviewing all our processes, particularly around budgets and expenditure, and placing greater levels of ownership and responsibility with officers who are at the sharp end, actually doing the spending. So it's giving them they had the power before to actually monitor it. Now we're looking to put the proper tools in place so they actually do that.
Great, thank you very much.
Councillor Fowler, please.
Thank you, Chair. Just get my question. Where are we? Hopefully got it right. Page 213 of the report states there is no one officer with day-to-day management responsibilities for energy supply contracts and billing. And my question there is, why is this the case, given the council's environmental commitment?
Just to address that, there is the council is currently going through a process looking at energy management, and those are sort of things which have been pulled together when it goes to the cabinet member decision notice. So a number of these items have been referred. Obviously, we've reported on this, referred through to the people who are pulling together those the tenders and the such like. So those things are going to be within that to be addressed.
Okay, thank you. Just one other quick one then. Again on page 213. Equally, I feel obliged to refer to the comment, where is it? Most of the council's gas and electricity supplies are with suppliers Corona and British Gas, who do not quote account balances and recent payments received on their bills. Most officers involved in bill paying do not have access to energy suppliers' online portals. Therefore, the council will not know what the official account balances are and whether they are correct. It just comes across as very, very messy.
I agree. Again, those, as we've reported this, those things are now being addressed. So it'll be resolved in future.
And it's had to been resolved in order for us to tender out for the new energy contracts.
Okay. Oh, Councillor Joseph.
Thank you, Chair. Page 212, again about the energy. It says that obviously energy billing within the council has not been the subject of an audit for a number of years. And obviously, as you mentioned earlier, you can't audit every single item, and I appreciate that. But surely there are some items that you don't audit on a regular basis, and perhaps you should do a handful of those, because clearly, whilst looking at the high level stuff, if the bottom level stuff is not being audited, there's a chance that there's money, things slipping through the net at the bottom while we're concentrating on the high level stuff, and allows for, things to go wrong in places that we haven't got our eyes on?
I fully agree with your comment, Councillor Jones. It's what we actually do when we pull the audit plan together. Every single system which we look at, we actually risk assess it and comes up with a score. So last year it may have a score of 50. As we haven't looked at it for a while, that score could go up. So yes, they do. They don't, just because we haven't looked at it for 5 or 6 years, it is actually percolating up the agenda. So yes, and that is a reason. One of the reasons it was actually completed last year.
So with something like energy, which is changing all the time, it seems surprising that it hasn't been audited for a number of years. I know personally, I get people ringing me up obviously every week trying to tell me they're going to save me money. Is that not something that should have been reviewed perhaps more often in terms of cost saving?
That's a good question. As I said, I go back to the comment. The score was reassessed, and the next item on the agenda will show you the work which we're planning for the current year. So it's we brought it in terms of our audit plans. We do provide it and we do challenge it. We do regularly reassess and rescore it. It was below the agenda. It obviously will come into the point where our energy management was coming under review, so that is the reason it was on the agenda for us to look at. Obviously, we identified a number of issues with the strategy and which needed to be addressed, and hence the report.
Okay, thank you. Councillor Coles, I think I saw your hand up.
Thank you, Chair. Yes. Steve, one question I have, having looked at the difficulties around external organisations coming back into house, I'm just wondering if you have a view that we might want to consider in the future around vivacity, and whether we need to have a very close look on an audit perspective on anyone who might be taking over that area, bearing in mind it's arts and hospitality and sports, which is quite vulnerable to COVID.
Thank you for that comment, Councillor Coles. On the next agenda item, our internal audit plan, we have actually made that very comment, that to put time aside to look at vivacity or whatever happens to it.
What we've also got is the learning points we did from the Amy stuff coming back into house as arrogant, and it's quite opportune to use one as a learning point for the other, because again, both of them are quite large blue collar services.
Lovely, thank you very much indeed.
Okay, I think that's it. No. And nobody else has got a hand up, have they? No. Okay, so we needed to receive and consider the annual report, which we've done, and that can go through nicely. On to the next item now, and that's Steve again, isn't it?
It is, Chair. Yes, thank you. Thank you so much. Well, this is the internal audit plan for the year 2020-2021 and was originally on the agenda for March. However, because obviously we're now a number of months into the year, we've had the opportunity to take that original report, look at those proposals which we're planning to look at, and it's been refocused to bring into sort of issues around COVID-19. So that's going to be some of our audits about focusing on how COVID has impacted on Peterborough City Council. New initiatives have been put in place. There's been some relaxations of rules. How are those operating? Are we sort of still delivering or not, as the case may be? It's already been mentioned about new ways of working. You know, health and safety is an issue that's been mentioned, people working from home. So those are issues which we're going to focus on with some of our work. And again, it comes back to that theme about fraud. We put more time in our audit plan to look at fraud. Peter's already mentioned about all the 32 million pounds of grants that have been paid out. The audit team is actively looking at these grants. We've got access to various software packages which we can run through to compare if the companies are still operating and that sort of thing, to make, and then obviously we can look to try and recuperate those. So our audit plan, what was originally on the March agenda, has now shifted and changed focus. There's 4 appendices which are included within our report. The first one is our audit charter, which sort of sets out how we actually operate as an audit team, our own internal processes, how we actually go about completing an audit and reporting into yourselves and into directors, etc. Appendix B is a code of ethics, so we have to be sort of exemplary now and professional at all times. So that sets out how we actually operate. Appendix C is a strategy, so that gives you a bit more detail of the audit areas we're going to be looking at, the resources we're putting into it, and what we're looking to deliver. And Appendix D, which is really the key really for discussion and challenge on, that's the actual audits which we've come up with. As has already been mentioned, we can't look at everything. So these are seen as the high risk ones, and the scores are reflected on the right hand side of the reports. There are obviously a number of audits which are below that, and those are greyed out. We do, after regularly throughout the year, reassess the audit plan. So things which were below the line may come above, and vice versa. There could be something completely new out there which we haven't picked up on, and may suddenly come in. Some change of legislation means we've got some real issues here, and that would then be reflected in the audit plan as well. So what you've got there is the work in terms of what we're going to do. So there are flexible works around external audit ones, which are the combined authority, which obviously we get internal monies from. The grants, which I've already mentioned, the number of grants we have to verify. And then you've got the highest risk scores. Some of them in there, if I draw your attention to the Infection Control Fund, this is something which is not just for Peterborough, it's also monies which comes into the County Council. And it's in our audit plan, but the County Council use the same process. We're going to do the audit to provide assurance for them. It's a similar sort of arrangement. They may have something on their audit plans where there are shared directors, and they can provide us assurance on those aspects. So that in that perspective, we can provide a greater assurance by relying on others. So I'm happy to take any questions about the detail. Thank you, Chair.
Thanks, Steve. No questions as such by the looks of it.
My hand raised, Chair.
Right, so nobody. Okay, we need to agree, well, we need to consider and agree the internal audit charter, which we've done, and the code of ethics, which we've done, and also the audit strategy and plans, which we've done. All agreed? All happy? Lovely. Thank you. On to item 9, I believe now. Yes, on to item 9. And I'll get to that in a minute.
Steve again.
It is. Yes, Steve, all yours.
Thank you. Part of the suite of reports which comes to the Audit Committee at this time of year is the review of effectiveness. It's looking to verify that the committee is following best practice guidance. It's been a desktop exercise which I've undertaken using various data sources from SIPFA and other organisations. And overall, yeah, the committee is meeting the guidelines. It is regularly meeting them. There's minutes, there are open discussion, there's set agendas. So we're following all the best practice. One of the things which we identified last year was to have additional meetings in terms of the pre-briefs. And those pre-briefs which we brought in for this, the last committee cycles, those are working. Obviously, we haven't had one this time. So we've moved further ahead in terms of best practice and developing. A separate area which members may need to consider about is, in the past, we have provided training to members about items on the agenda, or whether about the final accounts process, risk management, treasury management, etc. Ways of doing that will obviously change. We always used to meet up in the council chamber and do those. So those are things which we need to tease out. Is this appropriate forum for members to do that? And also we need to know members to provide us with areas they'd like us to provide further information on and training. I think one of the things which I would like to say, it's unusual because normally we have elections every year and there's a big turnover of membership on the audit committee. And by and large this year, we are the same as last calendar year. So in terms of knowledge and expertise, that's really beneficial, I think, to the working of the audit committee, that we have that continuity. But as I said, we do need to make sure that we provide you with appropriate training. So again, it's questions for you to, do you see this assessment of the audit committee as appropriate? Are the gaps which we've identified in terms of like training, is that still justified? It's over to you as members for your thoughts and comments, please. Thank you.
Okay, thanks, Steve. Andy? Sorry, Councillor Coles.
Thank you, Chair. Steve, I've got two questions. The first one is looking at your checklist, the two areas under 4.5 and 5.2, where you say Constitution doesn't allow us to hold periodic private discussions with internal or external audit. Is that something which is correct, that it should be that we don't, or do you think that there are other areas around the country where they do that and it's effective?
Can't do it.
Certainly that is what I've seen in other areas, but it may be, Fiona may want to make a comment about the Constitution, how it's set up, that we don't have private meetings.
Okay, Fiona, thank you.
Well, I think the Constitution can be amended to reflect whatever council wishes it to do. It's a question of what's considered to be best practice elsewhere. I think that's what Councillor Coles was asking. Is that right?
Yes, that's correct.
In terms of other local authorities, it's some of them do have those private meetings, but majority don't. We do obviously have certain items on agendas which the public are excluded from. So the public aren't aware of those. We don't do the same for officers. I personally, the best practice, says we shouldn't do it, or we should do it. My personal view, I think we should be open and transparent and have those open discussions rather than have private ones.
Thank you very much. My second question is really around training and whether it would be appropriate for us to have our own skills audit on the committee so we can identify where the gaps are, so that we can then ask for training that most of us need rather than purely on a personal level, to make sure we get the best bang for our buck.
There is the Audit Committee Handbook, which has been provided in the past, which sets out all the work of the Audit Committee, and that is due for refresh this summer. And obviously we do have a set agenda schedule throughout the year for the Audit Committee. It's quite unique in the sense that the accounts always comes to this one, and risk management every 6 months. So we can target those. So I can certainly draw up a schedule of when things should be and potential items of we could do training. That can be shared with members. I'll share it with Dan first. That can be sorted out, and then we can identify from those areas which ones we need to target.
Forgive me, what I meant was really, should we as members be looking at what our skills are and where we think we've got a gap in terms of being able to respond to the Audit Committee's needs, so that then you're provided with where we think our gaps are, then you can find the training to fit it.
I will take that away, Councillor Coles. I'm aware of a skills audit which has been done at another authority. I can get that template and I'll share that with through Dan to all members.
Good idea.
Excellent, thank you very much.
Okay, Councillor Joseph, please.
Thank you, Chair. Mine's more an observation, really. I was just going to say that I found the pre-meetings and the training very helpful, and I would certainly like them to continue. I think they've been a valuable source of information for those of us new to the committee. So well done on that. And yeah, I'd like them to continue if possible, please.
Okay. No more questions, Dan, are there?
No, no one else. Okay.
Okay, we're there to consider the recommendations to the draft response, the toolkit, draft response to knowledge and skills framework, and to agree any actions. Are we all happy that that's been gone through? Yeah. Okay, thank you. And then on to item 10, if I remember rightly. Yeah, item 10.
And this is Kirsty.
Thank you.
Thank you, Chair. Thank you, Pete. This report closes off the 19-20 financial year and was considered by Cabinet on the 22nd of June. As outlined in the Statement of Accounts report, this report shows an underspend position of 96,000, which was transferred to the capacity building reserve. As detailed in the points in the report, 4.6 and 4.8, actions have been undertaken throughout the year to achieve this position and include implementing new controls for both capital and revenue spend at very detailed level, rebasing all budgets in September, and the approval of the capitalisation direction that meant reserves were not needed to fund redundancy and transformational expenditure, a few of the controls amongst others. The chart in point 5.5 shows the movements from January's forecast outturn to the final position. Detailed commentary on the financial performance for all directorates and reserves are contained in the appendices A and B. For capital expenditure, the chart in point 7.2 shows how the programme of planned asset investment changed throughout the year. In order to help reduce the borrowing costs and therefore derive savings to contribute to the mitigation of the Council's forecast overspend, concerted effort for identifying and completing only the most essential projects led to the reduced final position of 64 million. The associated borrowing activity to support the capital expenditure can be seen in point 7.9, where actual borrowing for the year increased by 20 million. The outturn report contains the final position in relation to the Council's Treasury Management Strategy and the associated prudential indicators. These indicators help members overview and confirm the capital programme. Performance against these indicators are detailed in Appendix C. Two of the indicators you'll see where final performance differed to the estimate are for Indicator 3, which is linked to the financing of capital expenditure. Performance of this budget is regularly reported as part of the budgetary control reports considered by Cabinet throughout the year. The actual final performance reflects the fact that the minimum revenue provision, which is the repayment of debt, was greater than budgeted due to the number of assets with shorter lives than originally estimated, and delays with the development of the hotel in Fletton Keys, which meant that interest receipts were lower than expected. Indicator 4 shows the proportion of debt to capital financing requirement. It shows that the Council to be in an under-borrowed position. This is where we are using the strength of the Council's balance sheet to internally borrow in order to keep borrowing costs low. Overall, the amount of borrowing taken in the year was lower than estimated, but proportionately more when compared to the capital financing requirement. Appendix D contains the key financial performance with regards to payment of invoices and debt collection. And Appendix E provides additional information on the impact of coronavirus. However, it should be noted that this is just a snapshot of the position at a point in time, with more information becoming available subsequently. For example, the most recent announcement, which Pete has covered off by Robert Jenrick, regarding the 3 pillars of additional funding. And that's my presentation.
Okay, thanks, Kirsty. I've had no hands up here. Nothing at all. Okay, thank you. That was item 10. We've got 7 points there to agree. Rather than going through each one of them, I'm going to say, do we agree with all of them? If there's a particular point you want to comment about, please do so now. Okay, right. Thanks a lot, Kirsty. Everything approved with that. And agenda item number 11, please. Dan, who's speaking with that?
That's Pete.
Pete, right. Okay, Peter, whenever.
Thank you,
you're
Chairman. The risk management report is submitted to this committee twice a year. It sets out the risks identified as being significant for the Council and how they are or can be mitigated. This is crucial to the effective development and operation and risk management and corporate governance of the Council. By effectively managing these risks, the Council can more effectively meet its strategic objectives. Because of the COVID-19 emergency, there is an additional set of risks that are applicable just to COVID-19. Overall, the Council has 5 high-level corporate risks, 22 medium-level corporate risks, and 7 low-level corporate risks. These high-level risks, which are set out in 4.4 and also in Appendix A, are generally financial in nature. These risks are monitored and updated by service departments and fed through to a risk board, which meets on a 2-monthly basis. JMT review the COVID-19 related risks every 2 weeks. There are 10 high-level risks, and as can be expected, a fair proportion of these also link to financial issues. Those that do not link to financial issues include the failure to maintain an effective business continuity plan, transformation of services, safeguarding, care services, hospital discharge, and ineffective infection control by adult care service providers. All risks are set out in section 4.5 and red risks are shown in more detail in Appendix B. The Audit Committee must be assured that the Council has processes in place to identify risks on a timely manner and mitigation actions are put in place to minimise their impact. The committee are asked to note and comment on this report.
Okay, thank you. I'm just looking. Councillor Coles, please.
Thank you, Chair. Peter, thanks very much. I mean, a lot of red risks there, and particularly with the difficulty of assessing what we might get with COVID-19. I just wonder whether we've considered the impact of a return to a lockdown because of a much greater infection issue, and whether that should feature on its own as a particular issue.
Councillor Coles, it's a good point. And it's a bit of a moot point as well, because of when we do all the returns to MHC and the government, they initially said this is only going to last a certain amount of time. But in terms of the funding I've got on my returns to MHCLG, I have made an allowance for potentially a potential spike in the early fall, because it is significant. However, I think it's a good point in terms of raising that on a risk register. We're at the moment looking at this because a lot of the COVID stuff is now becoming operational. The COVID risk register will get very small now, and it will just be the key risk because the other things will move to departmental operational risks. But I'll take that point on because it's a good point.
I'm grateful. Thank you.
Okay, nobody else with any more questions? So,
Councillor Farrow has just indicated, Chair.
oh, okay, right, Councillor Farrow.
Sorry, Chair, I just spotted the, hopefully I've got the right bit. It's the bit about the Brexit impact. I know that previously officers had given us a sort of update and mentioned some concerns reference procurement. I just wondered kind of where we are at this moment in time, whether there's been any updates from central government, whether there's a plan of action, because I think the reference that was made at the previous meeting about just things like the legal terminology at the bottom of letters could cause a significant cost to the local authority.
Let's get to the right place. It's a good point, Councillor. At the moment, everything has been focused on COVID, and it's interesting. We've seen in the last week things starting to swing back to Brexit. There's been a few press conferences this week. We were in a place prior to COVID where we were just about ready to start changing everything. What we've got to do now is go back to that position and actually start assessing exactly where we have got issues. And a lot of the stuff we wouldn't have actually started to deliver until 2 to 3 months before year end, because you wouldn't want to change the processes and terms and conditions until the government have finalised the legislation. And at the moment, I think there's still issues on the overall legislation, as we've seen, and where we use what, how, why, when.
Do you envisage, then, as a follow-up question, do you envisage the need or the necessity for some sort of bespoke attributed budget down the line?
I don't think so. Initially, there will be risks that come on board. I mean, as this will be a bland example, but most dust carts, we have Dennis that are built in this country and one other, I think, but vast majority of dust carts or refuse vehicles, need to be correct, don't I? Refuse vehicles are built mostly in Germany and Holland. You know, there could be an issue with those if we don't get an order in before, you know, Christmas, or depending on when the orders come. So, you know, there could be a tariff put on that, which we'd have to then link to through the budget process and the monitoring.
Okay, thank you. There doesn't appear to be any more questions or comments. we're there to note progress. Are we all happy? Okay, thank you. On to item 13 and work programme.
Sorry, Chair, item 12 is the financial controls, which is Pete.
Have I missed that? No.
Yep.
Never. Have I missed the whole of financial controls? Oh, that's trying to prepare things in advance. That's Peter, is it?
It certainly is.
Right. Okay, go ahead, Peter.
This report informs Audit Committee on the progress made to date by the Council on implementing a range of recommendations made by Grant Thornton following their review of financial controls and procedures last summer. The recommendations are grouped into 20 key areas designed to ensure that the Council are following financial best practice. In the majority of these cases, PCC were already operating procedures similar to those proposed. The report sought to take these controls to the next level. The Council set up a financial controls board swiftly after the report was issued to meet weekly and to oversee the implementation of the proposals. During the last few months, a great deal of progress has been made in implementing these recommendations, and Appendix 1 illustrates this in the tabular form. Section 211 sets out where significant progress has been made, which has included rewritten financial regulations, updated schemes of delegation, improved formats to monthly monitoring reports. It must be stressed that the Council's external audit ISA 260 report would have set out if there had been fundamental control issues, and this is borne out by unqualified audits. The committee are asked to note the progress that has been made towards the implementation of these recommendations. Just as a note, obviously we've talked about rewritten financial regs and updated schemes of delegation. Obviously we need a Constitution and Ethics Committee to pass those through to get approved after you, but we're moving down that pathway at the moment.
Okay, thank you. Councillor Coles.
Thank you, Chair. Thank you, Peter. I think one of the issues I think we've dealt with before, or we've seen before, is about a bit of drift in terms of how quickly the Grant Thornton recommendations can be brought in. We've now had COVID that's added further complexity to it all. Do you think that there's any possibility of speeding up or getting to the end state in terms of the Grant Thornton recommendations, or are we going to have to re-examine those that have not been able to be achieved because we're working differently now?
It's interesting. As part of the initial work, we put in a number of controls, probably starting almost this time last summer. They've actually put us in good stead for COVID because people were used to doing business cases for things over 10K. We had very tight control over our establishment. And at COVID, we've just extended to that. As I say, there was nothing that we weren't doing that wasn't unlike other councils. Most of this is taken to the next level. We do need some Constitution and Ethics Committees, just because once we get the scheme of delegation and the changes to the financial regs in place, that then moves us on. But we're hoping that actually the vast majority of this stuff should be in implementation phase over the next couple of months now. And again, a lot of the stuff has been delivered to date.
Thanks, Peter. That's great news. It's going to be continuing. Thank you.
Okay, doesn't appear to be any more hands up. Looks like we're clear. And we will, where is it? Financial controls. We agree to note progress made. Okay, right. Now we're on to item 13, work programme.
Yes, Chair, thank you. It's just to note the work programme for the committee's work for the year ahead sort of follows a similar process to previous years. Obviously, anything additional to add to the work programme we can do if members so wish.
No. Can't see anybody adding to wish things. That's good.
Just a question from me, Chair, and just is Neil still on? He is or he isn't? I can't see. Hang on. Neil, is the September date too early for an external audit letter? It is, isn't it?
Realistically, yes, it is.
Yeah. Okay. Just looking at the timetable a minute. 16th of November, is that too late for a committee to get things approved? That's still within the timetable, isn't it?
Yeah.
Okay, no, so we'll need to swap things around, Dan, in terms of the final audit opinion coming to the 16th of November meeting?
Yeah, that's fine.
Just so we comply with everything.
Okay. Anything else? No, fine. Right. All done. I've got a parish council meeting to get to. At least I don't have to motor up to Barnack. So thanks a lot, members, officers and auditors. Good night and safe journey home.
Thank you.